Welcome to Let's Talk Mortgages. Today I'm here with Iftika Mohammed, who's been a mortgage advisor for over a decade now. So Ifti, to kind of clear this confusion on which one to go ahead with, let's go back to basics, right? What exactly is a fixed rate mortgage?
Okay, a fixed rate mortgage is where the monthly payment is fixed over a period of time. So for example, let's say you can take a 25-year mortgage, but if you say I want a deal for 2 years, your interest rate will be fixed during that 2 years. But if you take a deal for 5 years, even though it's a 25-year mortgage, you will know exactly how much you pay over the next 5 years. So that's called a fixed rate mortgage. Even though the term is longer, your deal period is a shorter period of time. And during that time, the rate is fixed.
So looking at the current mortgage rates right now, fixed rates have always been popular, but of course the fixed rates at this point in time are at a higher level. So is it still advisable to go for a fixed deal and maybe also consider a few options of the variable type as well?
Yeah, I mean, fixed rates are all, like you said, it's always popular. Some people are going for variable rates, saying that we are expecting interest rates to drop. So that's some people. But again, whether it's a fixed or a variable really depends on your circumstances. Because, you know, it may look like interest rates might drop, but what if it goes up, right? So interest rate might start going up, and if you're on a variable rate, you might be affected. But if you're on a fixed rate, you know in your mind, you budgeted how much you're going to pay over the next 2 years or 5 years, and that number is not going to change. So that's what it is. But again, you need to get advice on this because it's really based on your circumstances. So if somebody's thinking of moving house in the next 1 year, maybe it's an idea to go for a variable, because what happens is if you take something like a tracker rates, you know, you can break those deals without paying a penalty most of the time. So that's why I said it's probably best to get advice before you decide on this one.
Understood, Ifti. So my personal take on that, I would say, is mental peace. So for my own mental peace, I would probably stick to a fixed deal so that I know what I'm paying for the next 2 years or 5 years or whatever. Okay, now coming back to the main question. A lot of our clients are asking, is it the 2-year deal or a 5-year deal? I don't know if the rates will come down within the next few months' time. So should I fix it to a 2-year deal? Or if the rates are not going to come down within the next few months, should I fix it for a 5-year deal? It's a very confusing question to really answer. So what is your take and what is your analysis on this, Ifti?
Again, it depends, right? It depends on individuals and their circumstances, right? Currently, traditionally, fixed rate mortgages on a 5-year deal was more expensive than a 2-year deal. But currently we see both are sort of in the same line. At times, even 5-year deals are cheaper. But then, this is what I always ask myself, right? You ask yourself this question, why is a 5-year deal cheaper? The indications are, within the next 2 years, the rates might start dropping. So obviously, the banks are trying to pass that benefit onto the client as you go. So, but if you are thinking of, let's say, moving house in the next 3 years or so, a 5-year deal may not be the right thing for you, because if you have to come out of that mortgage, you might have to pay a penalty. But if you are thinking maybe over the next 2 years, I'm not planning to move house, 2 years might be good, because if the interest rates drop, then you have a chance of getting a better deal at that time. But if you are stuck with a 5-year deal, you got no choice, because you've signed up for a 5-year deal and you'll have to see it through, which means you're stuck with that rate for a longer period of time. But it's a close call, because like I said, banks sometimes factor this as well. You need to really understand your circumstances before making that call. But if you ask me, the more popular one currently is the 2-year. Looking at our stats, right? Looking at the mortgages that we do, that's because a lot of the people think, rates will drop, right? When it drops, I'll fix my rate at that point at a better rate. Because with 5 years, you're kind of stuck, really. You can't do anything for the next 5 years. And if you want to break that deal, generally penalties are quite high. 2 years, usually the penalty is about 2%. In the first year, it's 2%, and then it drops to 1%. But if it's a 5-year deal, it starts from about 5%, then goes down to 4, 3, 2, 1 every year that you're on that mortgage. So you've got to be a little careful. best get some advice on this, especially at this time, because the markets are a little tough.
I was actually going to ask you about the penalties and early repayment charges. I think you've explained it very clearly, Ifti. So what are the benefits of going for a 2-year deal, Ifti?
The biggest benefit, like I said, is, compared to a 5-year deal, you're only stuck for 2 years, right? So if the interest rates go down, you can always change at the end of the 2 years. And usually the penalties, like I mentioned, right? So if you have to break the mortgage, paying a penalty, generally the 2-year one, you have a little bit more, especially if you're in the first year. If you have to break it on a 2-year deal, you pay generally 2%. And on a 5-year deal, you end up paying 5%. Just imagine you bought a new house and you don't like your neighbors, right? And you don't get on and you want to move from that house. You're stuck, right? So you can't unless you sort of port it, which has a lot of catches into it. But, you might be stuck. So that is the biggest sort of advantage you have with going with a 2-year deal.
So going back in time a little bit, at one point, it's crazy to know that the interest rates were hovering around 10%. And of course, right now the interest rates are around 5%. But what if the rates go up to 10%, right? So do you think it's a good idea to fix to a 5-year deal?
That's a very good question, Pradesh, right? Obviously, interest rate at one point was even as high as 15%. I think it was just for a very short period. But the question you asked is valid, right? So you are obviously taking a chance, right? So if the interest rates go as high as 10%, then you are at a benefit. But whether it will go up so much is something we don't know. Currently, the indications are inflation is under control and the expectation is the interest rates to drop. But like you said, a lot of things can happen over a period of time. If you go back 3 years, interest rates were going at about 1%. And if somebody told me at that time interest rates will go up to 5%, I would have laughed saying, no, I don't think that will happen, right? But, it changed, right? So, it can happen, but chances probably slim, but you never know, right? So that's probably my answer.
Okay, so let's say if I fix into one of these deals, right? 2-year or a 5-year fixed deal. And say 1 or 2 years down the line, I want to rent out my residence and move to another property, but I'm still stuck on a deal with my current lender. Is there a way for me to still let out the property while moving homes? What are my options there?
You can get a consent to let. Usually, you've got to get permission from the bank before you let it out. Because remember, it's a residential mortgage and not a buy-to-let mortgage. So you always have to get permission. Most lenders oblige when you ask questions like that. And we've seen a lot of success rates in that. But it's at their discretion. But most of the time, they do oblige. So get a consent to let if you plan to do that, and you can do that. Again, there's a lot of pros and cons getting a consent to let. Get advice if you even have the slightest doubt that you plan to move house in the next year or so. It's probably best to get advice so that the advisor can factor this when he's giving you the advice or she's giving you the advice.
So my final question to you, Ifti, is now what are the factors I need to take into consideration when choosing between a 2-year fixed and a 5-year fixed, so that I'm very clear with my choices?
Mainly, it depends on your attitude towards risk, right? So if you don't want to take a risk, 5 years is fine, right? But obviously 2-year one, you're taking a slightly higher risk because obviously the rate after 2 years can be much higher. So you're taking a risk. So that is one thing. And next thing is your circumstances. Like I said, if you plan to move house, it might affect the deal that you're trying to take. So you need to look at those factors as well and how much you're comfortable with, right? So for example, if you don't think your income is going to go up quite a lot over the next 5 years, maybe it's probably best for you to go for a 5-year deal, because what happens is if your income doesn't change and if banks change their lending criteria and if you can't borrow, that can be a problem as well, right? Because with 5, you have a lot of certainty what you're going to be paying and you can be comfortable with that, right? So it really depends. So it's not hard and fast saying go for 2 or go for 5. When it comes to this subject, it's always best to get an advisor, put down all your circumstances, and based on your circumstances, make that call.
Thank you, Ifti. I think now I am very clear with what you just said. I need to sit down, kind of reflect on my thoughts and my preferences, circumstances, so that I can really analyze which type of deal really suits me. So thank you for that. But so for most of you watching this video, if you still have any more questions with regard to choosing between a 2-year and a 5-year fixed, do leave your questions down in the comment section below. We are more than happy to answer them. If not, you can call us at WIS Mortgages. We are a very friendly bunch of people, and you can even have a chat with our mortgage advisor Iftika or our other advisors in the organization. If not, you can contact your mortgage advisors if you have, or your bank. Because this is a very important topic in hand to really reflect in detail. So thank you once again, Ifti, for all of that valuable information. If you really thought that this video was informative, smash that like button, subscribe to our YouTube channel to be updated on more videos like this. Until next time, this is Pradesh signing off from Let's Talk Mortgages.